I'm Taylor Riggs in San Francisco in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, Tesla's turnaround. At least one analyst says it indeed looks credible. We'll hear from Dan Ives of WEDBUSH, who raised his price target on Tesla to $370 from $270. Plus, a co-founder exit. Travis Kalanick severs his last ties with Uber, leaving the board and selling the rest of his shares. What's next for him and the ride-sharing company? And tech regulation. Legal and legislative hurdles continue for technology, especially for overseas apps like TikTok. We'll hear from Senator Marsha Blackburn on how much more needs to be done. But first, our top story. A lot of market action on Thursday, specifically in the tech sector. The Nasdaq hitting another record high, closing above 9,000. The tech-heavy sectors now return more than 35% this year. It's on track now for its best year since 2013. And one of the best performers Thursday this year, it's been Apple. On a point basis, Apple's one of the best performers in the S&P 500. On a percentage basis, it has outperformed the rest of the FANGs. And speaking of another high, another day, another record at Tesla, closing out at $430 a share. Tesla and Elon Musk have defied the shorts in the last few months, and we'll have more on Tesla's record coming up. But first, I want to take a look at the 2019 story of Uber. The ride-sharing company went public in the spring, but it has faced a barrage of legal hurdles. Some battles were fought over its international expansion plans, with London stripping the company of its license. Another issue, whether drivers are contract workers or employees entitled to benefits. This week, we covered the man who co-founded the company, that is Travis Kalanick, and his desire to leave it all in the rear-view mirror. We reported Tuesday that Kalanick is stepping down from Uber's board. He has sold all of his remaining Uber shares. Kalanick was ousted as CEO in 2017 following months of chaos and controversy. For more, I want to bring in WEDBUSH Managing Director Dan Ives, and also with us, Bloomberg Technology Senior Executive Editor Brad Stone. Brad, does this help simplify it all and just leave Dara to do his thing?
No, I don't think so. No more simplify. It doesn't simplify things any more than were simplified back in 2017. You know, when Travis was ousted from the CEO spot, went to the board. Now, I guess, he was the largest shareholder and he was on the board, but, clearly focused more on his new company, Cloud Kitchens. He started selling the stock in early November after the post-IPO lockup expired. So this is a little bit of a sort of slow-moving divorce. But, from what I hear, Travis's voice wasn't, all that loud in the last 2 years. So it really just codifies things that have been underway since he lost the top spot.
Dan, do you agree? Did anything change for you on Tuesday on this announcement?
Look, I think ultimately it just ended a dark chapter. I mean, you're talking about someone that sold, almost $3 billion worth of shares. It's been an overhang on the stock, and I think it would have been awkward if he stayed on the board. And I think fundamentally it just speaks to Uber really being a train wreck since the IPO, and this was sort of the final chapter. Now for investors, the hope is optimism going to 2020, but Dara, there's a lot of pressure on him to succeed. I think a fork in the road situation for Tesla as we go into 2020. But when you look at Uber, I mean, that fundamentally, that's the issue right now. Look at some of the issues they faced. And I think right now there's a lot of worries, going 2020.
Brad, you're nodding your head. What are some of the issues that Uber is going to be facing?
Well, it really boils down to one issue, which is profitability. I mean, this is a company that's still losing billions of dollars. It's 12 years old. Its core market, ride sharing in North America, growth has slowed. And so investors really want to see growth in some of the newer geographies, and also Uber Eats, now around 20% of Uber's growth bookings. So it really comes down to, is this a business that can be profitable and keep growing? And Dara Khosrowshahi, who's now been the CEO for 2 years, put a stake in the ground. Profitability is around the corner, but investors want to see it get there.
Well, Dan, investors do want to see it. And if you want to come and take a look at a chart here that I'm showing inside my terminal, it is Uber and Lyft, both down now 30% since the IPO. Uber, though, I would note, has sort of been on an uptrend early to mid-December. Dan, in your case, what's the bullish thesis for Uber?
Look, I mean, for Uber right now, it's that you look at growth of underlying, not just drivers, but users in terms of penetration, 2 to 3% today. I mean, the opportunity is to monetize that going forward. If you look at growth and then profitability in 2021, but I think when you look at Uber Eats right now, I think that's what I view as about an $8 to $10 overhang on the stock. So then the question right now for Uber is, do they cut that business or at least significantly get to a point of profitability? Because it's really been an anchor on the ship. So for Uber, there's an opportunity. It's the sum of the parts. You look at everything they've done in autonomous, but for investors right now, it continues to really be a heartburn situation because of execution, overhang, I think, as well as just miscommunication with the street, and it's really been that trifecta.
And Brad, we were talking about Uber Eats there, and if I want to bring this full circle and tie this back to Travis Kalanick at the top of the show, we were talking about Cloud Kitchen and some of the other threats potentially to Uber from Travis Kalanick's other ventures. Where do we think Kalanick might be headed next?
Well, it's interesting because he has started this company that could be a partner to Uber, but could also be really working across purposes. So Cloud Kitchens, for those who don't know, is this kind of virtual restaurant idea that you can start these kitchens, lease the space to restaurants, and then just fulfill online delivery. And you can't walk in and get a table. They're purely for the online business. So that should help in Uber Eats. And in fact, they have a partnership, but Uber Eats also works with DoorDash and Deliveroo in Europe. And Travis has also been hiring former Uber employees, and Uber's gotten upset about that. So, clearly this could be an accelerant to the Uber Eats business, but Cloud Kitchens and Travis could also find themselves working with and helping Uber's competitors.
Dan, I spoke with Mark Mahaney of RBC earlier this week, and Uber, frankly, was his top pick for 2020. He calls it peak regulatory fear, where there's so much fear about regulation, AB5 in California, and he really thinks that it's overblown. What are your thoughts on AB5 and regulation overhang on Uber?
Yeah, and look, ton of respect for Mark and his call on Uber. And I'm with him in terms of positive for Uber, in terms of how the stock is risk-reward going to 2020. But fundamentally right now, the big issue, the black cloud, the AB5, because that really could be the gut punch to the business models of the gig economy as well as Uber. And I think there's variables there that need to be resolved in Sacramento. And I think the broader worry for investors that I speak with, it's not just California, is that how about this spread to other states, other countries? Look at London right now, which continues to be an issue. So I think regulatory, no doubt, is an overhang. But Dara and Uber need to handhold much better rather than the disaster story we've seen over the last 6 months.
And Dan, finally here, can you distinguish between Uber and Lyft? They're both ride sharing, or can you really firmly pick one over the other?
Yeah, I think right now, I think Lyft has a better shot of working than Uber in the near term. Domestic, which is the key. No, obviously, overhang from the food delivery piece, which is important. And I think it's more of a pure play, less regulatory issues. So I think in the near term, it's going to be easier for Lyft to work than Uber. Still think both names work. But I think it's going to be a little more of an uphill battle for Uber in the near term, just given some of the broader regulatory issues, especially London being front and center, that it continues to be called 4 or 5% of revenue, and that's a focus for investors.
Bloomberg Technologies' Brad Stone, thank you for joining us. And Dan Ives of WEDBUSH, you're sticking around. Now, Amazon says it had a record-breaking holiday season. The online giant says billions of items shipped and tens of millions of Amazon devices like the Echo Dot sold. Amazon also said 5 million new customers started their Prime free trials or paid memberships globally. The number of items that were delivered with one-day or same-day shipping quadrupled compared to last holiday season. And coming up, Tesla shares trading at an all-time high. WEDBUSH raising its price target on the stock by $100 to $370 this morning. We will bring you the latest next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Tesla shares trading at an all-time high, up more than 1,100% since going public in 2010. And according to WEDBUSH analyst Dan Ives, the turnaround in the stock is looking more credible. He raised his price target on the electric car maker stock to 370 from 270, and Dan is still with us. So Dan, come and take a look at a chart here that I'm showing in my terminal, because at 370, you're higher than the median average estimate of the street, which is 296, but frankly, the stock's run ahead at a 430. What do you see as your bull thesis?
Yeah, look, I think right now, if you look back at the last 6 months, it has been massively impressive what Musk and Freeman have been able to do in terms of turning this around from a demand and also profitability perspective, with Europe being front and center. Look, I view the stock sort of as a base and bull case. So base case, 370. Bull case is 580 to 600. So if they're able to execute over, especially over the next quarter or two, and this China thesis really starts to, I think, the upward trajectory in terms of Giga 3 as well as demand, then you could start to see a stock go much higher. So for us, it's more, this gets us to a base case. I think bull case is 580 to 600, and I think a lot of that really rests on China.
Dan, I've spoken to a few neutral/bearish analysts in the last few weeks, and they really are concerned about demand over there in China. Do you have any sense of what could be a bear case if something were to happen, maybe the economy starts to slow? What would need to happen for you to turn a little bit more bearish?
Yeah, I mean, ultimately, if I look at the work we've done in Asia in terms of on the ground there, and just overall demand, the question is, how quick could you get to 100K units in China? Could that be quicker than the US or Europe? And I think if the answer is yes, then I think this is something that could really take the story to the next level. I think in terms of the bear thesis, it's ultimately you hit some sort of regulatory roadblock in China. Giga 3 hits a snag, or you have competition that slows down the underlying demand story in China. And that would really be the bear thesis. But I can tell you right now, as someone that's been skeptical, as me and you have talked about many times over the last 6 months, Musk, Freeman proved us wrong. And I think many of the bears, to what they've done over the last few quarters, got to give them credit. Stocks obviously had a parabolic short squeeze, but China really is the key to the next leg of the growth story.
So much of the bull thesis relies on demand on the Model 3s, but that is the least profitable of all the models. At what point do you need to start to see demand shift to some of the other more profitable models?
Yeah, and if you look, obviously Model Y will come out next year, and you look at some of the, when you look at S and X, I mean, that's really started to tail off in terms of overall demand. And I think what's really been the key to the Tesla bull thesis, and really the stock going from 300 to now 430, it's really the profitability. I mean, they have done a great job in Fremont as well as in Giga, really getting a profitability on core Model 3 and what that trajectory looks like. But I do agree, you need to see it's really software and sort of upticks within the actual versions. You need to see that software versions from self-driving to others. That's an extra 5, 7, 10K per car. That's all profits, goes to the bottom line. So that's really going to be the key, that gross margin story for Tesla over the coming quarters.
Dan, come and take a look at a chart that I'm showing in my terminal, because you brought up profitability, and they had a big surprise profit last quarter, but they're cutting their way to a profit. Is that sustainable in 2020?
I think right now that's why we're still wait and see, because I do think that the rubber does meet the road here in terms of it's going to be tough to cut their way to profitability on that trajectory, especially juggling all these balls with China. You got the European build out, insurance, robo-taxis, and others. And that's why I honestly think the next few quarters, this is a stock that either hits a speed bump, bears come out of hibernation mode, and here we go again, or
Dan,
it's the next leg on the bull thesis.
Yeah, sorry to cut you off. When does Tesla need to tap the capital markets again?
Well, as of right now, that's why profitability is so important, because if they could stay profitable, then they don't need to tap the capital markets. If they hit a speed bump, you start to go in the red ink, then 2021, you could start to hit capital markets. That's actually why, that's been the huge overhang in the stock. many investors are like, how come the stock's had such a huge run? It's because now with the profitability and demand, it doesn't look like they have to access capital after obviously accessing it earlier this year. That's the key to the stock.
Who's the competition?
I mean, competition's many, far, and wide if you look not just in the U.S. as well as internationally. I think front and center is really going to be in Europe in terms of, when you look at some of the competition they're seeing there, does it impact them, especially countries like Norway? You look at Rivian, that's obviously a key sort of competitor. But as of right now, there's a moat. Does it start to hit them in terms of demand? And I think you won't start to see that until 1Q and 2Q. That's why I think right now, Tesla bulls are really starting to feel like there's fuel in the tank. We are still wait and see, but no doubt the fundamental story has changed over the last 6 months.
Dan Ives of WEDBUSH, you're staying with us because up next we are going to go through your research on what to expect from big tech in 2020. This is Bloomberg. We're back with Dan Ives of WEDBUSH. He's an analyst. Now, we've already gone through big tech's performance in 2019, so now I want to take the time to look forward to 2020. Dan, you know more than anyone else. It wouldn't be a day of technology if we didn't mention Apple, and thankfully from you, we continue to get more street highs. This time, you now have a street high of $350 a share. If you come and take a look at a chart in my terminal, that is well above the median analyst and well above where the company is trading now. So why 350? What's behind that call?
Yeah, it's really a continuation of our thesis playing out from this year into next year in terms of the super cycle. I mean, it really comes down to the math. 900 million iPhones worldwide, about a third of those, 350 million, have not upgraded in 39 months. And I think we are going into a super cycle. 5G is going to be on the tail end of that. And I think when you look at that and mining the install base, some of the parts, I think this is a re-rating stock that continues to go higher. I think 350 is base case. I continue to look out 2-3 years. You could see a stock that now starts to approach $1.5 trillion, $2 trillion in terms of that core thesis playing out over the next 2 years.
What if the upgrade super cycle doesn't materialize?
It's a great question, and that I think is the bear thesis is, okay, we've been there before. What happens if 5G is a bust, especially on the first part? I look at right now, if you look at iPhone 11 and you look at the trajectory going into later this year, I can tell you from our work that we've done in Asia, it looks like right now line in the sand is about 200 million units for the 5G cycle. So in terms of suppliers, all indications are that's going to be a real strong product cycle. There could be speed bumps, and I think we'll, of course, hit those in a given quarter going into 2020. But as of right now, the visibility looks as strong as we've seen it. I'd have to go back 5-6 years in terms of where I've seen it. And that's really why we have such a bull thesis here on Apple in terms of not just the Rock of Gibraltar iPhone, but in terms of services and re-rating.
Well, and part of the bull thesis continues to be a supreme balance sheet. And if we go into balance sheet analysis, I'm taking a look at another chart showing, frankly, $100 billion of net cash. That's cash after some of the debt that they have. What is the best use of cash?
Yeah, and they'll generate $60 billion in free cash flow. And I continue to think that they're going to get vertically integrated. They're going to buy more technology within the phone. You saw the Intel 5G acquisition. I could see more of those. But I do think content's going to be what they go after. I believe that they will acquire a studio in 2020. Talk about MGM, Lionsgate, a handful of others that I think would fit the bill because you need, right now, content's key to that services piece. So when you look at the streaming TV service, I think that's something that they can look to acquire. They're going to continue to do buybacks significantly, but I do believe Cupertino gets more acquisitive in 2020.
Dan, I want to flip on over to another stock that you cover, and it's Microsoft. And according to the Bloomberg terminal, you still have an outperform rating on Microsoft. I keep hearing that their Azure cloud product is poised to benefit more so even than Amazon from the shift to cloud. Do you agree?
That continues to be why it's our top pick along with Apple, and really it's been there since Nadella took over. Nadella, in my opinion, covering tech for 20 years, it's one of the most jaw-dropping turnarounds I've seen for any tech company, because right now Microsoft is the cloud play. And I think they've further narrowed that gap with AWS. Look at the Jedi deal, it's just a good example of that. So I think on the first phase of cloud, it was Amazon and Bezos. They won that. The next phase, it's Microsoft. And that's why, in my opinion, this is a re-rating stock. Numbers continue to go higher. And that's why I think this is one, we're only halfway through this cloud story playing out for Azure and Redmond.
And Microsoft's Teams product is a big competitor to Slack, which you also have an underperform rating on. Walk me through why you might be shying away from Slack.
Yeah, I think, not to be too Game of Thrones here, but I think winter is coming for Slack. Because when you look at Teams in terms of where that's focused on the broader Azure 365 sort of holistic vision, Teams goes up against Slack. And I think what's going to be tougher and tougher is that Slack tries to further penetrate their core Microsoft install base, which is key to the bull thesis. And that's why I think Slack's a stock that still, in my opinion, goes significantly lower from here because of that competition. It's tougher and tougher to go up against Microsoft on this area. Slack's a phenomenal company, everything they've done. I just think some darker days ahead as they go into Redmond's core turf.
And you also cover a lot of cybersecurity stocks, Palo Alto, Fortinet, Checkpoint, Norton-LifeLock, especially as we head into an election year in 2020. What is your thesis on cybersecurity?
Thesis is IT spending is going to go 3 to 4%. Cybersecurity, as of right now, is growing about 6 to 7 times that number going into 2020. That's why right now, in terms of cybersecurity, that continues to be, I think it's really a golden age for cybersecurity. I look at names like, Palo Alto, Fortinet, CyberArk, CrowdStrike, SailPoint. You're seeing more and more data move to the cloud. You got to protect that. Today, only 30% of workloads are in the cloud. That's going to 55% next 2 years. Big beneficiary of that is cybersecurity. That's why, in my opinion, going 2020, cloud and cybersecurity are the two key themes, especially in software, why I want to be invested. I also think there's going to be a lot of M&A in cybersecurity, and I think that's something where it's really fertile and ripe for consolidation.
You heard it here first, cloud and cybersecurity. WEDBUSH Managing Director Dan Ives, thank you for joining us. And coming up, Senator Josh Hawley is making his mark by taking on big tech. We'll hear from the senator on how he plans to make sure companies like Facebook and Google respect your privacy. That's next. This is Bloomberg. Senator Josh Hawley may be the junior senator from Missouri, but he's making a name for himself by being one of the Senate's most outspoken critics of big tech. He's introduced bills to make tech more transparent on data tracking, as well as trying to ensure U.S. consumers' data isn't sent and stored in countries deemed a national security threat. We spoke with Senator Hawley in November about taking on big tech, starting with a letter that he sent Facebook demanding they explain their location data tracking policies.
Facebook has said to its users now that they can turn off location tracking. Facebook users can, but as it turns out, you can't. Even if you say you don't want to be tracked by Facebook, Facebook on your phone continues to scan all of the Wi-Fi in your area. It continues to use your cellular location, and it continues to transmit that information to Facebook. So this is another misrepresentation, frankly, and I'd like to know, why is it Facebook is telling its users that they can stop tracking when in fact they cannot stop tracking? Google does the same thing, by the way, and I think this is just one more instance of these big tech companies not being honest with us about the data they're collecting.
So you think they're purposely misleading users?
I don't know how to read it any other way. I mean, you read the post that Facebook put up for all of its users saying that you can stop Facebook from learning your precise location. A very lawyerly phrase, as it turns out. I think the normal consumer would never imagine, if they say, I want to turn off my location services, that Facebook is actually still tracking them, still tracking the Wi-Fi, still using the cellular data, the cellular network to pinpoint their location. I think it's very misleading.
What would you like to hear back in response from Facebook?
I'd like to hear the facts. I mean, I want to hear their explanation for the difference between what they have told consumers and told their users and what they're actually doing. I mean, there's a huge gap there, and I'd like to hear them explain it in their own words, actually come clean, be honest, and set out the facts. But, you know, really, this just gets to, I think, the fact why we need to pass legislation. Congress needs to pass legislation that gives every single American the right to opt out of being tracked, period. No back doors, no workarounds. Every American should say, I don't want to be tracked.
Are you also planning to write a letter to Apple and Google, given that it runs on the Apple iOS software and Google's Android operating system?
Well, Google is already well aware of my concerns in this area, as is Apple. You know, Google has similar problems. I mean, Google testified to me under oath that their users could turn off location services and not be tracked. That's also not true. The Android phone constantly scans for Wi-Fi networks, constantly monitors your cellular network, even if location services are off, and it transmits that information to Google. So, as I say, the tech companies are really all doing the same thing. It is misrepresenting their positions to consumers while they collect this information. They need to stop.
You know, to be fair, we've heard a lot about data privacy. We've seen a few existing privacy legislation come out. They haven't gone anywhere. Why do you think yours has a chance to go somewhere?
Well, for one thing, it has bipartisan support. I mean, take the Do Not Track bill, which is a really significant move for consumers that would give every American the right to say, I don't want to be tracked. I don't want my location to be tracked. I don't want Google or Facebook or Twitter or anybody to scoop up information about me around the web, where I'm going. It would give every American a right to that. It's sponsored by Senator Feinstein from California, Senator Warner from Virginia. So we've got broad bipartisan support. It's a common sense measure, and it's something that consumers deserve to have.
That was Senator Josh Hawley of Missouri. Now, Facebook CEO Mark Zuckerberg visited Washington, D.C. in September. On the agenda was meeting with regulators about how to police the internet. He also had dinner with a group of senators, including Virginia Senator Mark Warner. He spoke to Bloomberg's Kevin Cirilli about what they had agreed on at the dinner table.
I think Mr. Zuckerberg acknowledged that self-regulation is not going to cut it, that the federal government needs to act, that there needs to be rules of the road. Those rules need to include more transparency, more protection for privacy, the ability for Americans to know whether they're talking to a human being versus a bot, and that we have to move around election security issues. And on a lot of these issues, I felt there was not full meeting of the minds. We didn't go through legislation, but I think he realizes that the status quo and the kind of days of the wild, wild west are over.
In terms of antitrust investigations and whether or not Facebook is too big, did that topic come up, and where does that stand in the Senate? We know that there's investigations in the House.
Well, a number of the Judiciary Committee members were there. I'm not going to get into what specific questions they asked. I think there was more conversation about things like election security, like identity validation, so that we could cut back on some of the hate speech, the manipulation that oftentimes has been used by foreign spy services, basically trying to represent themselves as Americans. But the specific comments on an issue like that, I'm going to let the members who may have raised those issues.
In terms of the timeline of when some type of regulation will happen with big tech, what is the timeline on that?
Well, my sense is it should be sooner than later. I mean, there is, I think, a lot of work that's been done on privacy. I think there's a series of bills that I've got around transparency that are all bipartisan. I would hope we could get to these to the floor. I think almost all of this legislation will get 70 to 75 votes. So, you know, one of the concerns has been that the White House has been reluctant, it seems, to have anything, particularly around election security, because it somehow makes them feel like 2016 might not have been valid. I'm not looking to relitigate 2016. I'm looking to make sure that our system is safe in 2020.
Switching gears, there's a whistleblower complaint that was filed about President Trump meeting or making some type of promise, allegedly, with a foreign leader. What has the intelligence committee been doing on that issue, and will there be subpoenas issued in order to find out who exactly this was?
Listen, I can't comment about any of the content of what may or may not have been driven. But I can tell you this, that Chairman Burr and I, our bipartisan committee, want to hear from both the acting director of national intelligence and the Inspector General from the IC. There is a great difference about how important this whistleblower complaint is. The law is clear. If there is disagreement, Congress still has a right and responsibility to know, because the most important thing we can do is that we have to protect whistleblowers. If they see something, they should say something, and they should not fear retribution. And the current circumstance where it's kind of in this back and forth black hole of no information and no disclosure, even to the appropriate members of Congress, just cannot stand.
That was Senator Mark Warner of Virginia. And coming up, a summit where lawmakers critiqued social media platforms. We'll hear from Tennessee Senator Marsha Blackburn, who was inside the White House's closed-door event. That's next. This is Bloomberg. President Trump held a social media summit in July. Several right-wing leaders, lawmakers, and presidential fans headed to the White House to discuss political bias on social media platforms. One of them was Senator Marsha Blackburn of Tennessee, who had been a strong critic of companies like Snapchat and TikTok. She spoke to Bloomberg's Emily Chang from D.C.
There are cases where predators, child predators, pedophiles have been arrested, convicted. They have used Snap to coerce and ensnare children, threatening to put their video on social media unless they send more videos. And this is something that parents need to have the tool to turn this off. There need to be explicit instructions for parents how to handle this. The other thing with Snap is the Snap Map application that is there. Unless that is turned off or properly set, these children can be identified, and their feed on Snap can be identified with their location. The third thing is the Discover section. I am horrified when I look through that at some of the information that children can get into through that Discover feed. And Emily, with one click or one tap, what these children could be exposed to is awful.
But what kind of legislation specifically do you consider proposing or think you can accomplish in order to fix some of these specific issues, whether it's Snap or YouTube or Facebook or Twitter or another company?
Yes, and yesterday in our hearing at Judiciary Committee, we talked just a little bit about this, because what we want to do is make certain that parents have the toolbox and that social media outlets are going to work with us on this. Privacy legislation is a big one here, making certain that individuals have the right to disallow a social media platform to access their data, to do that data mining, to get in there and grabbing this information. And that needs to be explicit, and the social media platforms ought not to be able to disallow use of their service. You know, they have really made billions of dollars off your data. Data is a valuable resource. So as we work through this issue this year, I'm looking forward to working with them to be certain that we address these issues of privacy and data security, responsible usage, as I said, antitrust, censorship, competition. All of that needs to be reviewed so that we are ready to move forward as we see 5G begin commercialization.
You also just met with Chris Huge, of course,
yes.
and very early Facebook employee who has argued that Facebook should be broken up. In a tweet, you said the meeting was refreshing. This guy knows a thing or two about what is coming next for big tech. One thing we both agree on, we can't just move fast and break things. Given that he has argued to break up Facebook, you've also got Senator Elizabeth Warren arguing to break up several big tech companies. You mentioned antitrust. Do you think big tech companies need to be broken up?
I think what we need to do is have a good discussion about what it's going to look like, what the marketplace is going to look like as we go forward in the next 10 years, 20 years. What we're suffering from at this point in time is that Congress has not taken an action to put any guardrails in place. Light touch regulation is going to be best, and let's do this a step at a time. Let's look at privacy where we change what they have access to and then see how that changes their business model. Let's exercise some preemption on data security and breach notification. Put in place some penalties and enforcements. Have that one regulator, the Federal Trade Commission, which is in charge of regulating privacy in this country. Let's see where we get as we take these steps. I think doing these one at a time so that we are working in conjunction to be certain that we keep the marketplace robust, that we encourage innovation, that we do not stifle innovation is important to do, and I think it's responsible of us as legislators to do that.
That was Senator Marsha Blackburn of Tennessee. Now, before the U.S. and China reached a partial trade deal earlier this month, Alibaba co-founder Jack Ma had said trade tensions between the two countries could last 20 years if they aren't careful. He sat down for an exclusive interview with Bloomberg's Inka Abukin in the Western African country of Togo in November. Take a listen.
Well, if we do not handle carefully, I mean, not the trade war might be, I say, USA and China relationship might be in some turbulence in 20 years. Next 20 years may last. We have to be very, very careful. I think it's so important for China and the USA, two great countries working together, the supporting economy, keep people prosperity, share a lot of technology together. And for so many years, China and US have been working together. There's a problem. That's very natural. If there's no problem, that's not natural, right? So when the problems, we have to solve the problems. We should not create more problems.
And you've said that you love Africa, and you've acted a bit as a bridge between China and Africa. What do you see as the main thing that China can gain from Africa, and vice versa, the main thing that Africa can gain from China?
Well, I love Africa since 3 years ago, my first trip. I read a lot of things about Africa. I thought I knew, but I came here and said, no, this is not. And I'm inspired by the people, young people, so many young people, and I inspired the origin of the cultures. I decide that I come every year, at least 3-4 countries, and I try to visit every country in 10 years. And I would not say that how China can help Africa or how Africa can benefit from China, but I come as a global citizen, as an entrepreneur. As an entrepreneur, I've been working in the world for 20 years. I think a lot of our experience, our ideas, our know-how could enable and help African young people. And meanwhile, these years I start to think, how can China help in a more efficient way? China putting a lot of efforts in Africa. When I was very young, I heard a lot of doctors in my hometown, they have to go to Africa for a year to help. But I think today, China and Africa, there are a lot of things similarity. Africa can learn a lot from China on how China developed in the past 20 years in such a quick way, how we lift the poverty out of that.
That was Alibaba co-founder Jack Ma. Still ahead, first the operator became a robot, and now the internet has bots replacing customer service reps. We look at who's creating those automated answers. That's next. This is Bloomberg. Federal regulators today unveiled a sweeping proposal that mandates the tracking of most drones. The Federal Aviation Administration says the measure would promote public safety and help prevent terrorism. The draft rules call for a massive new tracking network so law enforcement can spot the devices flying anywhere. Now, fashion designers, interior designers, graphic designers, well, now there's a chat box designer. Bloomberg's Aki Ito looks at one company that is creating these automated tools that are in almost every corner of the internet.
Around the world, businesses field hundreds of billions of requests from us each year. We want our flights changed, a purchase refunded, a claim reviewed. That takes the labor of millions of agents who tend to our every need. But soon, automation will take over much of that. And it starts with the painstaking work of this 23-year-old.
My name is Laura Morales, and I'm a chatbot designer.
You probably know the Dominican Republic for its beaches. But further west, in the country's capital of Santo Domingo, there's a bustling hub of call centers for American businesses. Laura works for one of them at a company called Outplex.
After you?
Some of Outplex's inquiries are handled by traditional call center agents over the phone. Others are handled by contact center agents over live written chat. Last year, the company introduced a third kind of agent, a bot. Laura oversees bots for 3 US-based clients. And these bots greet customers looking for assistance online. The bots resolve simple queries on their own, and the more complicated questions get escalated to a human representative.
Me as an agent, I used to take 3 conversations or just 1 call at the time. With bots, you don't have that limitation.
Alexa, will I need an umbrella tomorrow?
It might rain tomorrow. There's a 54% chance.
Bots today are everywhere. And so the people who design their speech are in high demand. The job is kind of like writing a very dry screenplay, with a choose-your-own-adventure element for the many ways customers will respond. The hard part comes once the bot goes live.
Can you go to the metrics hub over there?
Often, its pre-scripted conversations don't work out the way Laura and her team hope they would. So they're constantly tinkering.
The way to start a day with the bots, I need to check how the bots did on the previous day. So I go into analytics, and my favorite one is this. It's the unmatched phrases.
These are the moments when the bot didn't know what the customer wanted.
Exactly. And I can also see how many clients or visitors clicked on the first button or the second button on the main menu. So if my visitors are not interacting with my menus, that means that maybe something is not right.
So it's interesting because you used to be coaching the human agents, and now you're coaching a robot. Is that easier or harder?
It's easier.
You don't have to worry about hurting a bot's feelings.
You're not emotional about it. You're just doing what you need to do for getting the results you want.
Laura started out as an entry-level agent when she was 17 and worked her way up. Last year, she was chosen to manage her company's first interactive chatbot, and today makes about $8 an hour, which is 4 times what she earned when she first became an agent. The transition to work on chatbots took about 3 months to learn various aspects of the job, including training on special software that doesn't require her to code. Laura immediately saw the benefits.
A bot is never late. A bot doesn't get sick or pregnant. Those are specific human situations that you can't fight. Automation is able to take that out.
That's part of a Next Jobs episode, a mini documentary series hosted by Bloomberg Technology's Aki Ito. You can watch the rest on Bloomberg.com. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg.